Welcome to Trade Talk, the podcast where construction pros connect, share, and grow. Brought to you by Contractors Connect, this show dives into real-world issues facing today's builders on and off the job site.
Whether you're swinging a hammer, running a crew, or scaling a business, we've got the insights, stories, and expert tips to help you level up in the building industry.
I'm Sarah White.
And I'm Erin Bakker. And together, we'll be talking shop with industry leaders, tradespeople, and innovators who are shaping the future of construction.
Let's get to work. This is Trade Talk. Welcome back to Trade Talk, the podcast where construction pros connect, share, and grow. I'm your host, Sarah.
And I'm Erin, and today we're talking about such an important topic that's important to every business owner, and it's building your wealth.
Yes, so we have Dustin Terry, who is the owner of Clear Harbor Wealth Management, and he is going to be talking to our listeners and to us, honestly, about how you structure your business, plan for taxes, estate planning, legacy planning, all of those things that will help business owners grow in a way that's smart.
Right. And we know contractors are great at building homes and renovating spaces and designing spaces, but a lot of times it's hard for them to remember how to protect their own assets and in their business and make sure that they're set up for financial success now and in the future, because there's so many unknown things that can occur.
Absolutely. So whether you're running a small crew or you have a multi-million-dollar business, this episode is going to give you all the information you need to grow smart.
All right, let's jump in with Dustin Terry. Want to grow your network and your business? Join Contractors Connect, the go-to networking group for professionals in the building industry. For just $400 a year, members get 4 complimentary meetup tickets per year, a featured spot in our online directory, visibility at every Contractors Connect event, and more. Whether you're a contractor, vendor, or service pro, there's a place for you here. Join today at contractors-connect.com/memberships, and let's build something great together.
Hi, Dustin. Thank you so much for joining us today. I know you're going to have a lot of great advice for our listeners. Before we dive in, though, can you tell us a little bit about who you are, your company, and what your background is?
Yeah, absolutely. Thank y'all so much for having me, and look forward to the conversation. My name's Dustin Terry. I'm the founder of Clear Harbor Wealth Management. We have a comprehensive wealth management business here in Dustin, Florida. We're focused on comprehensive wealth advice and investment management with kind of a niche clientele of business owners.
Mm-hmm. And you're also an author.
Yes.
Yes. We have a book coming out. I have a book coming out called Founder's Fortune: How Entrepreneurs Build Wealth, Freedom, and a Lasting Impact. And, you know, in our business and what we do, because of there's just, and Sarah, I think you and I were talking about this before, there's such a big gap between what people think a wealth advisor does and actually what we do for our clients, right? Mm-hmm. So because there is that gap, like when we have clients come in, we start talking about their tax planning, their asset protection, the value of the business, how they plan to exit the business. And they're like, oh, I thought we were going to talk about our investment accounts, right? And so I just wanted to get that out into the marketplace and say, look, there's a whole lot more that goes into managing the wealth of a successful business owner.
And so that's kind of how we framed our interview with you today. We're going to kind of go over those tenets. And of course, people can read more in the book, but we're going to be giving them a sneak peek.
Sounds great. Let's do it.
Let's dig in. So the first question I have for you is about the recently passed Big Beautiful Bill. Were there any tax provisions in that bill that already existed that would be of particular interest to the construction industry?
So that was a very large bill. There was a lot of provisions in there. There's a few of those that I'm most excited about. A lot of the things that it did, it really just kind of made permanent some of the provisions of the Tax Cuts and Jobs Act of 2017. Okay. That was President Trump's first tax bill. So it made permanent like some of the tax brackets. One of the big ones that I was a fan of was it made permanent the increase in the estate tax exemption. Okay. So if that bill had not been passed, the estate tax exemption would have fallen back down to like $5.8 million, somewhere maybe around $6 million. That becomes a big deal for a business owner who's the large majority of their net worth is in a business that is an illiquid asset, right? So you think about someone who has a business that may be worth $20 or $30 million, that estate tax exemption was at 5. If they pass away, then they're going to owe something like 40% taxes on that difference, right?
Wow.
What Big Beautiful Bill did is it made permanent the increased level that we're at now, and starting next year, that exemption amount goes to $15 million, right? And so, and there's portability. So a husband and wife each get $15 million. So that business owner that has that business, it might be worth $20 or $30 million. They can now pass that along to their heirs and not worry about having to have a fire sale of the business or come up with the cash to pay that estate tax.
Which a lot of construction companies are family businesses. So that's definitely a big benefit to them.
Yeah, and I've got a few of these that I think make sense, and I'll just keep running down through here. But the estate tax was one of my favorites. Section 179. Most of your listeners are probably going to be familiar with that. That's immediate expensing for equipment and things that they buy for the business. That limit got increased to $2.5 million, so you get the deduction right in that first year that you buy those assets. That was a positive. One of my favorites that we've used for a lot of our clients when it comes to tax planning is a cousin of Section 179, and that's bonus depreciation. And that we use that typically when it comes to investment real estate, right? So if you think, and we probably need to define a few things here, right? So depreciation typically, as it relates to real estate, you have 27.5-year depreciation schedules for residential real estate, or 39-year depreciation schedule for commercial real estate. So if you do straight line depreciation, you get 1/39th of that off your deduction every year, right? Mm-hmm. Well, if you go and do what's called a cost segregation study, that's where an engineering firm comes in. And maybe some of your listeners even do this, I don't know. But they come in, they say, look, not everything in this building is 39-year property. Some of the HVACs systems, the roofs, the electrical, some of that might be 20, 15, or 10-year property, right? So what bonus depreciation says is that if it's 20-year property or under, you can take 100% of that value in the very first year.
Interesting.
Yeah, so
that's great feedback.
Mm-hmm. That's really impactful, and we've used that a lot with our clients. Most of our clients they have investment real estate, right? So most everybody that we work with has used that in some form of fashion. Now, let's just use an example. So let's say you buy $1 million property. Mm-hmm. Typically, depending on what it is, you might get 20 to 30% of the value of that property in the bonus depreciation. So maybe let's call it 25%. So $250,000 of a deduction in that first year from buying a property, right? That's a big deal. Now, in most cases, that ends up being a passive loss, and passive losses have to offset passive income.
Okay.
However, for people who are what the IRS considers real estate professionals or qualify for real estate professional status, they can elect to aggregate their real property, trades, or businesses together and offset active income with that passive loss. So we've had just a lot of success doing that for clients and getting some great results with that tax planning.
That's amazing because you're not even a CPA.
Yes, and I should have caveated this conversation.
But you're helping people save a lot of money.
Yeah, so we are not CPAs. We don't do the compliance work. We don't file taxes. We have great CPA partners that we work with, and we say, hey, this is what we're thinking about for this client. Can you make sure that this plays through on the tax return? We do the forward-looking tax planning and trying to reduce that. We always say we're trying to reduce your lifetime taxes. That might not always be lowering your taxes this year, right? So we look at
it's a holistic
That's
approach.
invaluable.
Yeah.
I love that.
You speak very fluidly about this, and it's complicated stuff. I'm impressed.
I would not know anything about podcasting or marketing or any of that stuff. So.
You're doing pretty well.
Yeah. What's one common mistake that you see entrepreneurs make that costs them money?
When it comes to taxes, waiting too long. A lot of times we'll meet with somebody. It's like, hey, it's March or April. My accountant just told me that I have a $200,000 tax bill. What can we do? Like, let's get a DeLorean and go back to October, because there's not much you can do after the end of the year. So start early, and you should be looking at your tax projections probably in October of every year.
Yeah, or maybe continuously.
Yeah, without a doubt. Yeah. For our most of our business owner clients, we meet quarterly, and so we're having these conversations all throughout the year. How's the year shaping up? What are we looking at for taxes?
Right.
We realize some gains in these stocks over here, and looking at all that.
Well, and your business may be like booming one quarter and not so much the next quarter. So you have to be managing that throughout the year.
Without a doubt, yeah.
So for contractors, cash flow is king. So with long, with long payment cycles and lots of upfront project costs. So what's your advice on balancing investment in the business with setting money aside for the future? This is something, we're not in construction, but we need this advice as well.
I think it really just depends on the entire financial picture, right? Looking at everything holistically, investing in the business versus taking money out to save personally. I think if you talk to most quote unquote financial advisors that are employees at the large firms, they're going to try to tell the business owner to take money out and invest it with them as quickly as possible, right? I could say that because I was one of those employee advisors before I started my own firm. But I don't think you should be taking money out too quickly in the life cycle of the business. I think you should be focusing on growing that business. We talk about it in the book. You'll hear the term, don't put all your eggs in one basket. Andrew Carnegie said, put all your eggs in one basket, but then watch that basket really closely, right? That's us. That's the entrepreneurs. They have all their eggs in one basket. So I get that. But it just depends on where that business is in its life cycle. If it's growing really quickly, pour gas on that fire, keep it going, right? If you're, ready to retire in 5 years, the business is really established, spitting off a bunch of cash flow, we call it your personal freedom fund. Make sure that is funded, and you've got enough money if something catastrophic happens to the business that you're still okay. So it is a balancing act, but you got to know where you stand, and what phase of life that the business is in.
Yeah. Well, that's when having somebody like you to bounce ideas off of, this is kind of daunting to do alone, especially if you start a business and maybe you're making, a couple million a year and then you get up to 20 million. Like, that's a lot to take on and to manage.
Well, and also that's not your skill set. Your skill set is doing whatever it is that your business is. And so to try to now become an expert in this information that is rapidly changing is really kind of impossible and not a smart move to make.
And we talk about it in the book. It's like, You're running your business. You're an expert at whatever your industry is, and then you have to go and talk to a CPA, and you got to go talk to an investment advisor, and you got to go talk to an insurance person, and they're all telling you different things, and one affects the other. And there's nobody there to translate between what all those other professions are telling you, and you're just like, I build homes, or I do roofs. I don't need to try to learn this stuff. Yeah. And that's the role that we try to take, is being that coordinator and that translator between all the professionals.
That's a great way to describe it. That made perfect sense to me.
Great.
Yeah. So how can owners structure their finances to where they're still paying themselves consistently, even when revenue may be inconsistent?
Build up your cash reserve as quickly as possible. I know that's in some of these industries that might be tough to do. And I hate rules of thumb, but have 6 to 9 months of overhead expenses in cash, right? And get yourself on a salary, get yourself on a consistent paycheck as quickly as you possibly can. I think is the best way to go about it. You can't make long-term strategic decisions for the business if you're in a cash crunch every month or every 2 weeks, right? You just can't make decisions like that.
And so would you prioritize building up your cash bank as opposed to investing in the business?
Yes. First, for sure.
Step one and step two.
It's back to that emergency fund that you hear about. Personally, you definitely want to have. My business, we have pretty consistent it's assets under management fees and planning fees, right? And it's consistent. There's swings in the markets that affect that.
Right.
But I still every day I look at my cash position and my projected fees every morning, right? And so you just got to know where you stand
Every morning.
And
sounds like my
doesn't
dad.
vary. It doesn't vary.
My dad's day kind of like depends on what the stock market opens as. Like that's the way he thinks. He's a day trader, retired now, but
Nice.
now like that it controls his mood, and we're always like, you shouldn't do that. And he's like, well, maybe you should.
Yeah. Yeah. Are there simple cash flow planning tools or systems you recommend?
Industry specific, into what, and your listeners are going to have their own tools and everything they use to manage cash flow and projections and all that. So nothing specific. I think it just goes back to like knowing where you stand.
Right.
I think first and foremost, just knowing where you stand. If you, if you start to see that cash position dwindle and you're not, you don't have any jobs completing or being paid off in the next month, right? You need to know that to get out ahead of the problem. So I think just being knowledgeable about where you stand at every moment is the best advice.
I like to do this all the time, and I send Erin long text message. This is how much money we have. This is what bills are coming up. This is blah blah blah, and she's like, okay.
I say thumbs up.
Yeah.
I'm down for whatever.
Yeah.
Can we pay them?
Yeah. If you're in the construction industry and your marketing feels more like a punch list than a plan, it might be time to call in the pros. At Bespoke Consulting, we help contractors and construction businesses get noticed with branding that builds trust, websites that convert, and marketing strategies that actually move the needle. Want to grow your business without wasting time or money? Start with Bespoke. Learn more at bespokeconsulting.com.
Let's move into talking about asset protection. So contractors also often have a lot of personal exposure, like equipment, job sites, liability. What's the first step in separating personal wealth from business risk?
The first step is going to be just having your business entities, right, structured, making sure, and I know how this happens a lot, right? You start a business, there's not really much there. You might spin up your own LLC, not talk to an attorney to get it done.
Wait a minute, are you talking about us?
Wait a minute.
Trust me, I've been doing this a while.
We may become a client.
There's no operating agreement, any of that thing. So
that's exactly us.
So first and foremost is just really having your entity set up, having your agreements in place first and foremost. But the second is just as important, and I know everybody does this. So keeping those personal and business assets separate, right? You're out to dinner with your family. Let's use the business credit card.
Oh, yeah. No, we don't do that.
I got to write this check for the car payment. I just happen to have my business checking account.
Oh, yeah.
Right.
No.
And so something happens, your business, you get sued in your business. A good plaintiff attorney is going to say, look, you're treating these as one entity, your personal and your business life. You have pierced the corporate veil, and now you lose all protections that LLC, that LLC affords you. So I just say, look, just really treat it like a separate entity, right? Pay yourself your salary and your distributions, but don't be mixing and matching paying bills with your personal and your business assets.
Yeah, I could see. We don't do that because we're a partnership, and so
I wouldn't want to feel like
I could see how you could do that if it was just me, myself, and I.
100%,
Yeah, I could see that.
And so you don't think about it. You're like, it doesn't matter, and it doesn't.
I'm going to pay myself that anyway.
Yeah, or maybe for taxes it might cause some issues, but you're not. It's our job to look for the train wrecks down the road, and so that's a big one.
It sounds like a nightmare.
Sounds like it. When does it make sense for a business owner to consider things like an umbrella policies, trust, or other entity structures?
Umbrella policies, I think, right away. They're cheap. There's really no reason not to do that. Trusts or other more complex structures, that just depends on kind of the life cycle of the client and how much assets they have. Do they have a lot of properties? How much is the business worth? That's going to depend on whether we need trusts or separate entities or anything of that nature. I think, also, you start to think about complexities of business, and a lot of times people in the trades business, they'll have different business lines. Oh, well, we've got an opportunity to do this. Let's start doing this now.
Oh my gosh, I don't know if I feel seen, targeted. Like, did you set this up on purpose?
I didn't, but Erin's husband owns a roofing company, and they have different lines. Yeah.
Oh, I thought you were talking about Contractors Connect and
no.
all its sub-brands.
No.
Okay.
I know. I was talking. You've got different.
Yes.
Your gutter line, your metals, and
Yep, we do.
Yeah, entrepreneurs are going to entrepreneur.
Yeah.
Right.
That's true.
So it's it just depends on the complexity of the business as to when you need to get into more of those more complex structures, but like umbrella policies and stuff right away.
And that's the kind of advice that you can give to your clients.
For sure, yeah. And it's a lot of times it takes an independent eye to be having those discussions. And when you start talking about, you start talking about those different business lines, you're like, and so to the entrepreneur, it makes a whole lot of sense. But then, I might be asking questions, well, is this core to your business? And also, I know we'll get into business valuation and stuff later. Like, does it impact the value of your business? Is this business line that is less profitable actually bringing down the value of your business?
Do you not hear Contractors Connect yet?
Nope.
You're deflecting. Okay, so if somebody has built a successful company, what's the number one thing they should do to safeguard their assets?
Yeah, I think it just goes back to the
just depends.
Separate entities. Well, everything when it comes to financial planning, everything it depends.
Right.
But you ask an attorney, an accountant, or a financial advisor,
right.
They're going to say it depends. But having those separate business entities, and keeping them separate. I think I might have missed this point, but even separating out those different business lines, if one of those business lines might have a higher lawsuit rate, or it's riskier, someone more likely to get hurt in that line of business, it might make sense to actually have separate business entities for each business line that then goes up to a holding company. Just knowing your business, knowing your industry, knowing what risks come in your industry, and making sure that you've got the brick wall in between your personal and your business assets.
Right, to protect yourself.
Great advice.
So many contractors don't think of their company as an asset that they can eventually grow and sell. So what factors actually drive values in the construction industry, but really any business? How do you figure out your value?
So growing value, I think first and foremost is you want to build recurring revenue streams. I know in a lot of the folks listening, probably they're like, nah, that's like our recurring revenue is to go sell another job, right? So I get that. But establishing maintenance contracts or service agreements or long-term client relationships, anything to create predictable, like any
Erin calls that mailbox money.
Yes, any kind of steady income, right? Like, okay, we built this house. Would you like us to maintain it?
Yes.
Anything like that drives value for especially for what I would consider financial buyers.
Yes.
Now, when I say financial buyers, I'm going to be talking about private equity or large family offices that go up and buy businesses. It might not matter as much to a strategic buyer, maybe a competitor in the neighborhood that's going to buy you, or a second generation person that might not.
But go ahead and think big scale.
Yeah. So if you want to, you want to be thinking about getting the best valuation for the business. You want to go after those financial buyers. That's when you're going to get the biggest EBITDA, earnings before interest, taxes, depreciation, and amortization multiple. That's
okay.
I don't know what you just said, but I believe you.
Yeah.
That's your bottom line profit.
Okay.
Right.
Yeah.
Basically, a lot of businesses, most businesses in the M&A world, mergers and acquisitions. If I use an acronym that you don't know, please stop me. But a lot of buyers in the M&A world, they look at EBITDA, your net profits, and they'll apply some multiple to those net profits, and that multiple gets larger when you have more things like recurring revenue, when you have strong operational processes for bidding or reviewing your jobs or determining where they are or collecting the payment. Those processes are huge. They love to. Those buyers, those financial buyers, they're not coming in to buy a job, right? They want to buy something that, hey, this is operational by itself. That goes also to the owner needs to be pulling themselves out of the daily operations every single day. I've got a list. And
Goes to having the right people in the right jobs.
Yeah.
Yes.
I mean, I'm 43. I plan on working, as long as I still enjoy it. So 20 something more years.
I was going to say
at
2 or
least.
3.
Yeah. But I have a list of things that I want to be taking off my plate every day.
Yeah.
And I review that every month. And the more that you can get those things off your plate, have strong leadership team, and say to a financial buyer, this is a box that is very operational, creating that mailbox money that skyrockets the value of the business.
That goes back to your delegating.
Right. I want to talk about that a little bit more. So you have a list of things that you review every month that you want to make sure that you're training other people to take those tasks off your plate.
Yeah, without a doubt. And usually it's I don't know if
Should you write this down?
I'm a big fan of Dan Sullivan, founder of Strategic Coach, so I listen to a lot of his stuff. And so he says that procrastination is wisdom. In that, if it's something you keep procrastinating, it's not within your core competency, and so that's why you don't want to do it. Those are the things you need to delegate away just as quickly as possible.
I don't know what would be left.
Sarah's got a little different mindset. She doesn't really mean it, I don't think.
No,
but
I don't really mean that.
No, she loves her job.
That's why I still have a list. It's not something that happens overnight,
Yeah.
Right.
But checking in with yourself.
With a team of 4 of us now, there's a whole lot less on my plate than there was 2 years ago.
Okay, we're going to start doing this.
Yeah, we are, but you have to be willing to take it off your plate.
Right.
It's true.
Sometimes she likes to just keep it and complain about it.
It's not great for the control freaks,
Yeah,
for sure.
that's me.
So how far in advance should a business owner start planning the process and preparing to sell or transition their business?
Yeah, that's a really important question. I would say at least 5 years. By talking about those things that you can take off your plate. As it sits today, most business owners still have a lot of that stuff, so you need to give yourself time. But ideally, today, start planning.
Yeah, just think of it that way all the time.
All the time. A couple of things that we talk about with our business owner clients is to start thinking about that. And then that way it gives you a roadmap of what you're building towards. And it's also like a scorecard, right? If you have an idea of what your business is worth today, and then you can it kind of helps you. We're making progress.
Right.
The business value is growing. But also, starting today, the reason you want to do that is because that would also make the business more enjoyable to run, right? So you think about when you go to sell a house, right? What do? You start fixing up the things that you've neglected for years, right?
And then you're like, well, maybe I shouldn't sell it.
Yeah, 100%. So you go and fix that cabinet or redo that guest bath. And of course you do the landscaping and all those things. So, and then you look around and you're like, hey, this is pretty nice.
Yeah.
Maybe we stay here now.
Why did I wait so long to do this?
Yeah, and it's the same thing with the business, right? When you start fixing all these issues, taking things off your plate, you get good leadership teams in place. All of a sudden you look around and you're like, hey, this is pretty enjoyable. I not necessarily want to sell it, but if, God forbid, something catastrophic happens, health, accidents, things like that,
You're ready.
It's ready.
Yeah, so kind of pulling those last few questions together, developing multiple streams of revenue. And we talked about, I call it mailbox money, but just having ways that you've, lots so that you're not so pigeonholed, but you are still in your basket of eggs that you refer to.
Yes.
And then we talked about delegating, and you had an interesting approach with that, with looking at the list of things you want to take off your list and making sure somebody else can do them as well or better. I love that. That's good whether you're selling a business or not.
For sure.
And then last kind of ties into that makes your job more enjoyable.
Without a doubt.
And profitable.
Yeah,
Everybody wins thinking like that all the time.
And so then if you keep getting rid of those things that you don't like doing, that you keep procrastinating, and you come in every day and you're only doing what you enjoy doing and what moves the needle or what moves the ball down the field, if we want to use a sports analogy, then that's fun.
Why would you want to leave?
It becomes fun again, right? A lot of times business owners are in the early days, it's exciting and it's fun, but then by the time they're ready to wrap up, they get, and the reason being is because they're not working in what their unique skill set is, and so they're just they kind of get burned out.
Yeah, I've done that. Yeah, I get it. All right, cool. Well, let's move on to investments. So a lot of construction business owners are all in on their business and maybe a few rental properties. Why is it important for them to diversify beyond that?
Okay, so I'm probably going to have a different answer to this than most what I would call an employee advisors would say, as I said earlier, because a lot of those advisors, those firms will try to get you to take money out of that business as quickly as possible. I don't think you should diversify away from your business too soon. Right. It goes back to that life stage. Where are you at in that business? If that business is growing and you can pour money back into that business, I use our business all the time, right? Like we're growing currently between 30 and 40% annualized, right? Like there is no reason for me to take capital out of that business and invest it elsewhere, right?
Right.
And so you have to know what your business is worth, what the growth rate is, all those things. A lot of this just comes back to knowing where you stand today. But once you kind of get a more established business, 20 or 30 years down the road, maybe that growth rate it's not even growing, but it's a cash cow. It's just spitting out cash. That's when you really want to think about, okay, do I have that personal freedom fund set aside? But do not diversify away from the business too soon. So going back to where you are in the business.
You can diversify within the business.
Yeah.
You can still stay in that basket of eggs and do things within your business instead of like what you did. You wrote a book.
Right. Yeah.
I mean, that's exactly what you did. You stayed right in that basket. You wrote a book. Another stream of revenue, all kinds of opportunities will come from that. Now you're a famous podcaster. I mean, here we go.
I'm on the Trade Talk podcast.
I mean, this is huge. So you have arrived.
I've made it, right?
Yep.
Yeah. All right, well, I don't want to quit asking you questions, but we're running out of time. So how about we have you stay here and we'll continue on for another episode. Are you good for that?
That sounds great.
All right. See you next Tuesday. Thanks for tuning into Trade Talk, powered by Contractors Connect, where construction pros connect, share, and grow.
If you enjoyed today's episode, be sure to like and subscribe, leave a review, and share it with your crew.
Until next time,
stay sharp,
stay safe,
and keep building.